What's up guys, Malik here. Welcome back to my channel, and today we're going to be looking at all of my trades on the NASDAQ 100 today, August 2nd. And today, yesterday we had the US credit rating got downgraded by Fitch, and that's usually something bad. That's saying that the US is not a good lender. It's basically like the credit score of the USA went down based on this organization. That's basically what happened today, and the market clearly reacted to that. So today was like more sell side bias, and you could actually see the market kind of break into a downtrend. So I was able to capitalize off of this, and then I had the trades hit my take profit, and then I had some like bad trades at the end, but I kept the risk small, so that's what really helped me out today. So if you remember from yesterday, I had trades that the max risk was around $14, the lowest was $5, and then some of the profits were like 50, 20, thereabout. So today the max risk was about 1080, and then the lowest was around 490. So I tried to keep the risk small. So let's check out the first trade, which was actually a trade from last night at 11 on the 11:15 candle. So let's go to Tuesday 11:15. That would have been 23:15, and this is on the 1 hour. Okay, bring it to the 5. So 23:15. Bring it right over 23:15. And what was happening here at 23:15? I took a sell side trade. Both of them, even this one was a nice trade to the downside, but then because I didn't set a take profit when I woke up in the morning and closed the trade, it was right back where I closed the other trade early in the night. So that was a little messed up. So I entered this one at 15,640.3, and then I closed this one before I went to bed. So this one, no, I had a take profit on this one that got hit, but the other one I didn't have any take profit. So one hit me out at profits, and then the other one, when I woke up and saw it, I took the profits, and that was basically close to where the other one had closed. So you can see I closed this one manually closed at 3 a.m. So that's at 3 a.m. here, and that's at 15,602.2. So I had my take profit at probably 3 to 1 or just down to the zone here. So I had that right there, and then I had this one now. I entered at 15,639.9. So that's the next trade right above 639.9. You see it's relatively close to where I entered on the previous one, but I actually closed this one at 6:45 in the morning. So that's when the market started to reverse. The funny thing about it is that I could have actually held this trade, and then if I held it right into today, it would have been a nice clean trade. So I'll probably try to do that another time, but it actually came right back up to where I entered. So this would have been a point where if you move your stop loss to break even, you would have probably gotten hit out on this trade. But if you held the trade for this would have been this would have been a couple of hours, you'd have made out well on this trade. Like this is around a $300 trade here, but you'd have to hold it for around 15 hours, which is a bit much, I'd say. So this one I closed at 15,602. You see that's right here. So this is when the market actually came down, made its lowest point at 430 before reversing up, and then kind of tapping that same area that I entered at, and then push right down until the lowest point was around 12 o'clock today. So yeah, this trade was actually 15,601. So the next trades, mostly losers, but you can see small losers. So this one was a trade I entered at 7:15. So 7:15, entered at 15,623.9. 0.8, 3.8, and that was to the buy side. And then I actually got stopped out on this trade on the 8:15 candle when the market started to reverse at 15612.2, 612.2, and then that's the same stop loss of the other trade, so I probably entered both of these at the same side to the buy side. So both of these, so you see I entered this one at 15623.8, and then the other one I entered at 15623.7. So one was a loss of 580 and the other was a loss of 575. Okay, so the next one now, and you see I did both of these in pairs as well. So I'm splitting up the trades. When I split up the trades, if one starts to run, I can take profits, move my stop loss to break even on the trade, and then have the other one continue. So this next trade I entered at 8 on the 8:15, and this was to the buy side again, 15611. Keeping the losses small have been a game changer, because when the profits actually come in, I can hold for a bigger swing. But then if I keep the losses small, it doesn't really affect the profits when I make them. So I entered this one at 15611.3, and then I actually got stopped out at 8:30. So the next candle right after, I was going to the buy side. The next candle right after hit me out at 15596.7. Okay, and then the other entry was at 15606.5, 606.5. You can actually see here I split up a 0.1 into two 0.05, and then just basically put my stop loss where I would have put it even if I was doing a 0.1. So just because I'm dividing the size doesn't mean I'm going to keep the same risk or increase the risk, because that's basically going to have me risk too much. But if I keep the same risk that I would have had if I didn't divide it, then the loss isn't bad, because it's still what's this, $11 loss here. Okay, so the next trade was to the sell side, so we actually caught the sell side pretty nice today, and kind of just felt based off that credit rating something bad would have happened in the market. So I just wanted a good sell side trade. So this trade was actually 9 o'clock. Before the market opened, I saw like a little play off the resistance there. That was at 15596.2. And then this one actually closed pretty fast. So I didn't expect it to move like this, but it closed pretty fast. On the same candle, it pushed down to around 3 times the risk that I had on the trade, and that was at 15578. 15578. So that was a profit of 1820. That was in 9 minutes. And then the next one, I had my take profit set, so it hit me out at on the 9:30 candle for 81, and then that was at 15514. So this was just taking it to the sell side, and there was way more profit potential in this trade, but because I had my basically my target set at 3 times the risk for the first one, and then for this one I was just aiming for this zone. As I'm saying, basically I'm not going to be greedy. If the market is going to push down, let me take it out where it goes for sure. If it came down here and rejected, then I would have been in trouble, but it came down here, broke through, so it hit me out pretty quickly, and I couldn't do much about that. For the rest of the day, I basically almost tried to get back into trades, but it ended up being all losers. So you can see at 1080, and this was at 11, yeah, that's 11:15. And trading after 11 I see is not very good. Like the market is moving very funny, so you're not able to catch a good move like what you'd get at 9:30 thereabout. Or if you enter in before 11, you'd have to already have the trend, but after that it basically just ranged. So I entered this one at 15595, 15 15.595. Oh, it's strong. 15.595. But that was at no 15.429.2. 429.2. And got stopped out at on the 11:30, which is the next candle right after at 15.440 for a total loss of 1080. And then this was the same stop loss for the other trade. So I did both of these trades at the same time. So this one was entered at 15.427.5. The first one was at 429.2 for a loss of 1080. Second one was 15.427.5 for a loss of 625. So I was trying to get more downside move, but as you can see, when you hit around 11 o'clock, it's like the move is basically done. You get all of this move 9:30. This is 10. This is your 11 o'clock. This is your 11 o'clock candle, which is actually the rebound. The 11:15 came down to 12 o'clock, which was the lowest point of the day. After that, you just reversed and ranged after that. So the next one I entered at 12 on the 12 o'clock candle. So that was the lowest point of the day. And I entered to the sell side again. So you know I got taken out quickly. Quickly. The next candle took me out. So I entered this one at 15.342.5 and got stopped out on the 12:15 at 15.362.5. 362.5. So the first one was a loss of 10.05. Second one was a loss of 9.85. 15.342.8 was the entry of the other one, pretty close to the last one. So that's why it was a loss of 9.85, not the loss of 10 there. So the next one, to what happened here. So when I didn't have great signal, so I made one trade, and then while I was driving, the other trade didn't get to go through until like 5 minutes later. But it still was a good entry, even though it was a loser. So this one I entered at 12:15 again, and this one was at 15.360.2. No, 15.346.2, and got stopped out on the 12:30, which is this big green candle, at 15.360.2 for a total loss of 7 flat. And then the other one I entered at 15.348.4, and that was a loss of 590. And then the last trade on the day was actually at 3:56 because I was expecting something weird to happen at the end of the day. I was thinking, all right, 4 o'clock we might get a big push up, but then 4 o'clock nothing happened. Qualcomm had earnings, they started to dump, and then that kind of pushed the market down before it hit out my stop loss, and then came right back up. So this trade I entered at 3:45 on 15.386.3, and then I actually got stopped out at what's this 4:45. So it was, of course, this 4:45 candle came down, wicked me out, and then continued to up. So I would have been in profits if this trade had held, but where I had the stop loss, it definitely came and hit me out. And the broker, the other market players can see your stop loss and hit it out if you have your stop loss set on the market, right? That's basically it for today. You can see that there are some points that it's almost obvious that the market might push down from there, but you have to just get used to seeing it. So that's why I'm just reviewing the trades, and you actually see which ones were the most successful. This one was a trade I entered right here, entered at 9 o'clock, took it to the downside, and then you can actually see it rejected here. You started to push down from here. It kind of rejected here, took out some of these people that entered. This can be like a small liquidity, and then you start to break down, and then you just enter from there. You could have entered at 9 o'clock, 9:15, 9:30, 9:45, even the 10 o'clock. Just looking at this candle, you would have entered at the stop loss above here, took it down. But you're not gonna get all of them, so that's why I think where strategy is getting better is keeping the risk low, keeping the risk at around $5, $10 max on every trade, and then trading from there, just getting three times that risk, or doing two of them or three of them, getting your risk back on one trade and then having the others run. But that's basically it for today's video, and I'm seeing how it might be nicer to trade on the 1 hour and the 4 hour. So I'm gonna start actually paying attention to these and see what I can find on these higher time frames and kind of trade it from there, because you can see nice movement here. You get a nice entry here and you're great. But I'll see you in the next video. I hope you enjoy it, and I hope you really take note of what's going on. See you in the next one. Bye bye.